Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Oh, hold on. Whoa. What's going on here? Where's my camera? Sources, camera, properties, deactivate, activate. Hey, how are we? All right, guys. So we got retail sales. Yesterday. Very, very interesting day. Let's go look at it. So here we are in the treasuries. Well, we got some news about, this is today, huh? Yes, we got some news about Israel and that whole conflict that seemed like it was going to end. Treasuries actually bought on that and then faded later in the day. And I think that there's kind of this thing that's like, they're not sure if that story was actually like as meaningful or impactful as we thought. Hold on, I'm not on the right screen. So we did fall back. I don't know if that was actually because they thought the war was still on or what. But here this morning, we're pushing up higher. So that's interesting. S&P 500, like they made a pretty good recovery yesterday. Just a little bit down overnight. So that the instruments are kind of like a little bit disconnected. And I would say like some of these flows have been stronger than anticipated. Like, okay, we were coming down, but wasn't that because... I don't know. The whole thing that like the war is going to end and that's good for treasuries is kind of bizarre to me. Oil is still up there though, 73. Ooh. Silver, gold, silver. Well, no, what the heck? Look at that. Gold just down a little bit, but nothing too interesting. Silver, another little jump higher. Wow. Silver just continues to impress. Copper also kind of skidding along the bottom of its channel there. Japanese yen, similar story. We're at 97.5 essentially in the dollar. And Bitcoin, so we had this down thing and then like they recovered, moved higher even, and then there was like another sell. They're recovering it. They're already turning back down. So Bitcoin has entered into a very different kind of market, and it is very much back and forth. This really looks to me like there are some major sellers getting out of Bitcoin, but then, you know, they print more money and they just continue to try and prop the price back up. But who knows? You can't really. I don't really have enough information to really say. That's just a picture that I make up in my head. Okay. So we have retail sales, U.S. retail sales month over month. We are expecting a headline reading of negative spot 6. Okay. So they are expecting a bad number. If it was more than negative spot 6, I think that would be pretty bad for the market. Maybe would really boost treasuries. So, okay. And U.S. core retail sales month over month, they're actually looking for a reading of spot 2. So that's like once you take out some of these things like autos, it's actually a gain of spot 2. So core retail sales matters more. But if core retail sales was negative, that would also be a big deal. Probably a bigger deal than if, you know, we got negative 1% on the headline. We're also going to get U.S. import prices and retail sales. So I don't know if those are like necessarily like market moving headlines per se. But I do think that it is going to give us a bunch of interesting information for the economists to kind of look through and determine like where are the increased costs for tariffs going and things like that. So it's kind of nice to be here on time. At about 2.5 minutes. Oh, I've been muted. My gosh, you're right. Okay, retail sales month over month. Negative spot 9 versus the expected negative spot 6. Core retail sales negative spot 3 versus the expected spot 2. Import prices 0 versus expected negative spot 2. And export prices negative spot 9 versus negative spot 2. So the export price is declining so much is a very interesting thing, and I have never seen that before, and I don't know what to think of it. But it is very, very, very interesting that the treasuries did their knee-jerk reaction higher and immediately got cut back down. The numbers absolutely say to me higher chance of interest rate cuts. So why did they get cut back down like that? Well, let's just wait and see, because it seems to me that the net change in volume through that candle wasn't that huge. So, you know, I keep looking over here like I would like to take some trades in the micros. Not necessarily right now, but what I'm seeing right now is the spreads have just gotten terrible over there. You're paying like $10 spreads. Now someone's selling this. This is interesting. So oil was unaffected. ES initially fell. ES fell, Treasuries bought. That's the correct reaction. Why did we see flows push back? Well, the net imbalance in the 10-year is starting to come out on the side of longs. I don't know. I kind of feel like 26 is right. I'm really tempted to buy it here, but I think it makes sense. Look, there's a lot at 404 we could pick off. Good. Okay. I don't think I can touch that. Make sure that I'm turn that off. So what I just saw there was I was thinking about 404, right? And the treasuries, the main treasuries over here, ticked down. They ticked down, and when they did, the micro briefly went below 404 and then up. So there was like a little bit of an extra head fake over here. Giving you the 404 is one guy. It's probably the best I'm going to get. Okay, so somebody did pick it off. And they ticked up pretty decisively there at 26 now. I don't know. That behavior just has me a little bit too apprehensive about it. On the other hand, when I get really weary about it like this, that's when they're like really good trades. So, I think I'd be pretty happy with 404 right now. About like what? Up 3 ticks. Too early to call. Gotta remember the Sierra charts thing. I have to make a video. Well, the kids are going to grandma's house this week. So I will be here alone, and that will give me time to make a video, do the Sierra charts thing. Hopefully. They even mowed the lawn for me, so I don't have to worry about that. Look, it came back down. Business contact, welcome. Have you seen oil prices? What about them other than, you know, that they're up since obviously they're up since the Iran conflict flared up, but that's not new. So what is it that I'm supposed to see in them since yesterday? Not sure I can make much of that since it jumped. Oh, ships on fire in the Strait of Hormuz. What's that about? Oil prices up after reports of 3 ships on fire in the Gulf of Oman near the Strait of Hormuz. Octavia says I'm going to sit on my hands. But like it was really hard for me to resist there. But I just knew with the way that it was acting, especially in the micros, probably wasn't going to be very favorable to me. They may, as of yet, work this out and eventually jump higher. But it is definitely not the kind of flow and trade that we're normally looking for, right? There does not appear to be any clear meta order. In fact, I'm getting some really conflicting signs. Here you can see the treasuries did eventually move up, right? But it hardly resulted in almost not very much of a change in the actual price here. And meanwhile, ZB has started selling really hard. ZB has started selling really hard, and ZB selling really hard would make you think, oh, it's going to steepen. But it's not yet. So that's all very, very conflicting. When we look at the treasury overall, one thing that I do see is that it was really, really tight in the overnight, and that we kind of started this at the market maker's break-even line. So that might also be playing into some of this, that like the market makers were already kind of strained before this started. But either way, does not seem to be resulting in very clear flows in the treasuries markets. And I guess that then on top of that, I'm not sure I can really explain what's going on with the export prices. If that's matters. Markets are due for a pullback. JP Morgan trading desk turns tactically cautious. What am I? You know what? Like, business contacts saying, have you seen oil prices? So, like, coming back over to here. Well, I suppose we are almost $1 higher. So, this normally would be seen as relatively significant move. So, because I'm reading these headlines about tanker collision near the Strait of Hormuz, that seems like that would trigger oil, and it's not. But then I'm looking at it and I'm like, well, but it is up $1, so maybe that's all there is to it. Thursday is a holiday and tomorrow, well, yeah, but that's not... You know what? I don't remember what happened last year. Do you remember what happened last year? On Juneteenth. I think it ended up being a really slow day, didn't it? But I think the thing is, retail sales is a really important number too. Like, I'm really surprised, frankly. I'm really surprised that retail sales is a pretty impactful number. We're in a situation when I would expect it to be particularly impactful because it's giving us a lot of information about that we need. And the number missed the consensus by a significant amount. And we got the correct knee-jerk reaction, but they got cut back very quickly, and now the market's acting like it doesn't matter. And yeah, there's an FOMC tomorrow, but that would normally be like, make it matter even more. I don't know, maybe in this situation it doesn't, because this is not going to change the Federal Reserve's opinion of whether they increase or cut rates right now, right? Like, they're still probably going to cut in September. Maybe that's part of why maybe that was wise. They said, well, nope, you can't. We're not going to have 3 interest rate cuts, so I'm going to smack this back down. Something like that? I don't know. Let's see here. Let me read more about these crude oil tankers. Tankers Adeline and Front Eagle collided in the Gulf of Oman, about 24 nautical miles east of Khor Fakkan in the United Arab Emirates, just outside the critical Strait of Hormuz choke point. The maritime incident occurred amid ongoing regional instability and increased GPS signal degradation, most likely linked to broader electronic warfare surrounding the Israel-Iran conflict. So are they saying that it was kind of like unintentional? Maritime security firms Vanguard Tech and Ombre have assessed the tanker collision as a navigational accident with no indications of foul play or links to the ongoing regional conflict. Both firms have classified the incident as non-hostile in nature, downplaying the initial speculation of an attack. Who owns these tankers? Adeline, the 23-year-old Antigua and Barbuda flagged tanker with no known insurance and a history of Russia-India sailing routes, may be part of Moscow's dark fleet. All 24 crew members aboard were safely evacuated by the UAE National Guard. The Front Eagle, owned by Frontline Pick and flagged in Liberia, also reported no injuries and is oh, okay, so that's interesting. So they're both kind of like, they're not owned by any of the major powers or people involved in the conflict. While traders initially feared a security-related incident which spooked oil and shipping markets, preliminary assessments so far indicate otherwise and likely just a navigational incident. Ombre analyst Daniel Smith stated, at the time of writing, we can only confirm that it is not a security incident. We continue to investigate the cause. Possible visual evidence of the incident, reportedly showing at least one of the involved tankers engulfed in flames, was circulated on X. The footage remains unverified but has been widely shared. The maritime incident comes one day after widespread GPS jamming was reported across the Strait of Hormuz, scrambling navigation for more than 900 vessels. A site that publishes daily heat maps of GNSS disruptions. What does GNSS? Affecting aircraft shows multiple high interference zones clustered around the Strait of Hormuz. So is that not related to the Israel or Iran conflict though, and is maybe due to people in Yemen or something? No, because the Strait of Hormuz is along Iran. Okay. The broader concern is that critical maritime checkpoints, including the Strait of Hormuz, Bab el Mandeb, and the Suez Canal, remain highly vulnerable to disruption should the Israel-Iran conflict escalate or proxy groups tied to Tehran become further entangled. These corridors are essential to global energy flows and commercial shipping, and any kinetic spillover or asymmetry activity in these waterways could have immediate consequences for energy prices and global supply chains. Okay, so I guess they're saying that this particular incident is not necessarily a huge deal, but they're kind of concerned that it's just the first of many and that those could cause a lot of carnage in the oil markets. Now, the way that the oil has been acting since then has been pretty varied, so I maybe see some evidence of a large meta order buying, kind of like a naive meta order buying, like this right here, this trend line. Always get a little suspicious when you see trend lines in commodities that are that clean. And my back is a little iffy today. I'm going to go roll it quick. So I'm reading here on Reddit. R/futures trading. Are there any Discord communities out there for full-time ES and NQ futures traders not interested in groups full of 20-year-old prop traders or meme stock hype, looking for serious professional traders only? I've noticed there's this thing where, like, if a Discord community is popular and active, that it's a bunch of kids. And that, like, making it a little bit more professional pretty much completely. Okay, so now the treasuries are coming down here. I'm really glad that I didn't take that trade. I don't understand what's causing this flow, but maybe some insider, maybe there's some informed trading going on here. I don't want to call it insider trading, but there might be some informed trading coming in here, trading on something that we don't know about yet. And we kind of got all of the signs in it, didn't we? We kind of got all the signs that there was something wrong. It wouldn't necessarily have given me a short, but it definitely kept me out of a bad long. Anyways, but it's weird that this guy is posting it in the futures trading, because there is the futures trading Discord. But this guy, he wants to do ES and NQ futures, and that's the other thing. Is like, I really don't think that you're going to get very many serious people, and like I think that ES and NQ lends to a less serious type of trader. Do you only trade bonds? I mean, I wouldn't say that I've only ever traded bonds, but right now, pretty much only bonds, yeah. I don't know. Right now, can I even really say that I trade? So it's like every time that I'm even thinking about taking a trade, Well, actually, it's kind of curious because all of these times where it was like I was thinking about taking a trade and I didn't have been the right call. There have been a couple of times where I just kind of like wasn't really paying attention. Like I missed good trades because I wasn't prepared. Is kind of more of the missed trades. But there's this broader thing that, like, because our session is so shortened now, it's kind of hard for me to trade overall anyways. And I've kind of turned into, we're just going to try and provide as much information as we can in this short stream. You're becoming powerful and talking yourself out to him. That's true. I do believe that I have become too risk adverse with it. But I don't think that is just my risk aversion. It's also my understanding that, like, of the timing and all that sort of stuff doesn't typically make sense. But, yeah. So that's a little frustrating, but... Can I get a note? No. My voice is a little bit vocal fry today, isn't it? Do you see that there at 25 half? Okay, so like there's an offer right now. No volume going through. Kind of nonchalant. Let's see if it ticks back up again. Because every time that it's ticked back up and they put any kind of bid on there, it immediately gets wiped out. Okay, so they just did. They put 94 on the bid and that immediately got sold. I even saw like what I would call a machine gun. Like they put 1,000 contracts in there and it just do and they took it out. So it looks like the seller's still there. He's not done. Is kind of how I would read that. I don't think that I would put a trade in there on that because we do appear to be creating a little bit of a liquidity hole here. Okay, now we're seeing this really, really big order kind of form at 23. So when I see that is usually a deception. Like, we've been moving down. Why would the big order show up at 23? And so very, very often we find that if we do get back up there, that order pulls. But that is if you do actually get back up there, because sometimes it just keeps trending. So, but it is a particularly large order. Which again for me is kind of a, when I see shenanigans, I stay out. I don't know if I should call that one shenanigans, but it's a little sus to me. If it was later in the session, like before the equity indexes open up, is actually relatively early, so we should maybe pay it a little bit more heed because of that. But if it was like after 8 o'clock and I was seeing that, then I would definitely be like, that's fake.
Connection lost.
Uh-oh. That's kind of weird. You guys still with me? I'm still getting data in my Jigsaw, but my Ninja Trader died. Why would that happen? PayPal says yeah. So I assume that means yeah, we're still with you. So nothing happened to my internet. Let's just check really quick. When weird things like that start to happen, sometimes it's a sign that I've let the disk space get out of hand again. No, we're good there. Okay, there's a further move. Big iceberg at 20.5. So maybe I'll type this in Discord later, but I'm seeing some of the guys talk in the Futures Trading Discord. Robux, but it seems like if Israel is dead set on a regime change operation, Iran is going to need some type of escalation options for leverage. Okay, so it does seem to me that Israel is attempting to cause regime change. I'm a little bit like, because that's definitely, like from their actions and what they've said, that's definitely what it seems like they're going for, is a regime change. But I'm not sure I understand how they can actually force that. I don't think that you can actually force a regime change with, enough missile strikes and stuff like that. You can hope that there's some sort of public uprising. But I don't know if there's enough going on for that to happen. So I think Israel wants regime change. I don't understand how they're going to make it happen. The way that the treasuries are trading here really strongly suggests to me that somebody thinks they know something. There is a really large meta order that is selling here in this market that has stood in the face of like really dovish news. If, government insiders and so forth knew that there was some sort of escalation coming in the Iran-Israeli conflict, that would certainly justify a trade like that. Except for that, then we come back to, wouldn't that be a buy in the treasuries as a flight to safety? Or is it a play on that inflation will be too high, so I'm selling it? I'm just not quite sure. I mean, if it was really that, wouldn't oil be moving too? But oil's not moving. So it's got to be something else. What is driving this order flow? That's why I keep checking Zero Hedge to be like, well, maybe the retail sales was, maybe there's some information in there that I don't understand. Okay, well, now I have a story about that. White House seeks meeting with Iran's foreign minister as Iran eases punishing strike, according to Axios. So that is in line with tensions easing again, which yesterday was a buy in the treasuries. So I don't know. I don't know if ChatGPT would help us in this situation, to be honest with you. It's kind of been a weird thing. Over the past day or two, I've started to see a lot of misuse of LLMs. You know what's something that really drives me crazy? Is when people use LLMs to write Reddit posts. They're like, I asked the LLM this and this is what it gave me. And then they post it. And that's like the whole post. And it's like, dude, if I wanted to know what an LLM thought about that issue, I would just ask it. The worst is when they don't give you the prompt that they gave it. So then I'm seeing some posts and things like that on the internet. They're like, ChatGPT said this. And I think that when there's like a dispute about something, that asking ChatGPT can be a really valuable way to get a better view of that dispute. But you have to ask it in the right way, because depending on the context, you might not think that you're leading it on, but depending on the context that you get, you are going to lead it on. So I saw an example of this yesterday with autism, where this person, there's an argument in the autism community about whether autism is actually a deficit. I think that the evidence is pretty clearly on the side that there is a deficit in certain domains. There is a deficit in certain domains within autism, and there can be strengths in other domains. And so you can't necessarily be explicitly thought of as a disability unless you have really severe autism, right? But it would be incorrect to say that it's not a deficit, that the problems with it is only because society's not set up for it. That's incorrect. But if you ask ChatGPT about that in a way, in language that is kind of like more woke, then ChatGPT will absolutely reflect all of the people on Twitter and everything that are like autism supremacists, right? That do think, oh, the only reason that autism is a disability is because the world is built for neurotypical people. Not true. But see, a person with autism, one of the things that people with autism struggle with the most is theory of mind, which is like, I have a model in my head of what other people's heads look like. What does this person believe and how are they likely to act in a certain situation? So like the simplest example is a person puts an item in a box and then leaves the room. And while they have left the room, somebody else comes in and takes that item from the box and puts it somewhere else in the room. And then when that original person comes back in, where are they going to look for the item? Well, obviously, they're going to look in the box, right? That person at that point has a false belief. They believe that it was placed in the box because they put it there, and they don't know that after they left the room that somebody came in and moved it. This is the thing that even autistic people will eventually figure out, but like when you're a kid, kids don't understand that at first, and autistic kids, it takes them longer to learn that, right? So that's like theory of mind. So there is, what do you have an effective theory of mind for ChatGPT, which is to say, how do you understand what ChatGPT is doing, how it comes up with its answers, and how what you say can affect the response that ChatGPT gives you out. And somebody with autism that doesn't have their theory of mind is not as strong might ask a question in a way, not understand how their question is actually leading ChatGPT to give an answer. And then ChatGPT gives this answer like, oh, that's great, you're so smart, yada, yada, right? And then they completely fall into it. And then you get these other people that on top of that, they are just really, really vulnerable to the flattery, etc. And it can just lead them into straight up psychosis. Like we've seen a lot of instances where people were driven literally to psychosis by ChatGPT, going into all sorts of conspiracy theory and spirituality nonsense. So yeah, it's really, really interesting, and I'm seeing it more and more. But in the trading world, we have some really, really easy ways to get around those problems, and the answer is to focus ChatGPT on empiricism and past data, because they very much train ChatGPT to focus on empirical data, right? So if you explicitly tell it this within the context, what are some past instances? Okay, let's try it. Although I don't think that it's going to give us a very good answer, because it's not going to have very up-to-date information. Today, retail sales missed considerably. There was an initial jump in treasuries, which is in line with what I would expect, but that was very quickly cut down and very quickly reversed, and later a large sell came through. Are there any historical examples that might explain why these sell flows are coming through? I'm interested if it's in the data specifically, because it could be anything, right? And it could just be a bigger story, right? That might explain why these sell flows are coming through. Question mark. There are historical examples where headline retail sales misses were initially bond bullish, yields down, prices up, but then reverse as markets process details within the report. Below are common explanations and a few examples. Deeper report factors that can reverse a bullish initial reaction. Control group strength. The control group, retail sales, ex autos, gas, building materials, and food services, is what feeds into GDP estimates. If headline sales are weak, but the control group is strong or revised up, it can often offset bearish growth signal from the headline. Upward revisions to prior months. A weak current print can be offset by strong upward revisions to previous months. If the market thinks the trend is stronger than the headline suggests, that can trigger a risk on flows or unwind long bond position. Actually, why am I doing this? I just have it read it.
Misses were initially bond bullish, yields down, prices up, but then reversed as markets process details within the report. Below are common explanations and a few specific examples. Deeper report factors that can reverse a bullish initial reaction. 1. Control group strength. The control group, retail sales ex autos, gas, building materials, and food services, is what feeds into GDP estimates. If headline sales are weak, but the control group is strong or revised up, it can offset the bearish growth signal from the headline. Example: August 15th, 2023, July retail sales. Headline beat was modest, but the control group was very strong at plus 1.0% versus plus 0.5 expected, which caused a bear steepener, yields up, especially on the long end, despite the neutral-looking headline. 2. Upward revisions to prior months. A weak current print can be offset by strong upward revisions to previous months. If the market thinks the trend is stronger than the headline suggests, that can trigger risk on flows or unwind bond long positions. Example: November 16, 2022, October retail sales. The headline beat, but prior months were revised up significantly, driving yield curves higher, despite the Fed being
We
near
should
term.
go and find those spots and
Number 3.
check them.
Nominal versus real confusion. Retail sales are nominal. If inflation, especially from CPI a day earlier, was softer than expected, a weak nominal sales print can still mean strong real consumption. This can cause growth-positive interpretation, leading to equity buying and bond selling. Example: April 14, 2023, March retail sales. Headline was weak, minus 1.0% MOM, but real consumption wasn't as bad given softer CPI a day before, which caused some intraday reversal in bonds. 4. Heavy supply or positioning overhang. Sometimes the flows have little to do with the data itself. Treasury auctions, rebalancing, or
Right
large
now, so
CTA
this is the one that I'm kind of
institutional flow
thinking
can
about.
dominate. If expectations were for an even worse number, or if the market was already heavily long bonds, even a miss can be a sell the news event. Key takeaway for today's behavior.
Why did it
If
say that?
Headline:
Why did they
retail
say
sales
that?
missed. Bonds jumped but then reversed hard. A large sell came through after the initial move. You might be looking at a situation where the control group was stronger than expected, or there was a substantial upward revision, or the market interpreted the miss as not bad enough to derail the economy, and large players used it as liquidity to offload longs or reset risk positioning. If you want to post the exact report numbers, headline, X auto, control group, revisions for today's release, I can help diagnose more precisely what likely drove the reversal.
Okay. So, coming over to zero hedge, as a reminder, this data is nominal. So, adjusting for inflation, retail sales actually rose 0.9% year over year, back to its lowest since October 2024, but still positive. While the seasonally adjusted sales print was down, unadjusted sales were higher in May. However, there's a silver lining as the control group, which feeds directly into GDP, rose spot 4% month over month, which was better than expected and considerably stronger than the upwardly revised 0.1% month over month decline in April. So it sounds like that basically all of those things that it was talking about actually happened. The nominal was still positive, the control group was better than expected, and the past numbers were upwardly revised. So that might explain why the knee-jerk reaction, all the algos trading off of that were fine, but then they dug into the report and they sold it. I don't think that explains this further sell. How much did it end up being, by the way? 8 to -8, so about 16,000 contracts. It is reverting back through, though, and we never really got a significant change in the yield curve, although we are now possibly seeing some steepening on this way back as the 5-year is pushing harder than the 30-year. So this is a very interesting... I think I learned a lot here, because I don't think I've ever seen this situation. But I do think that there's a good chance that all of that behavior can be explained within the report. I don't know if ChatGPT necessarily helped, because I might have read that in zero hedge and seen that. I guess I wouldn't have seen that it was as significant. But the reason that it was so helpful was, again, because I asked it, okay, like, there are past times where this has happened? Apparently. It says yes, so I have to go back and verify. I'm too lazy to go back and find all the dates that it's talking about and see if that's actually what happened, but It could be making it up, right? Results of a breakout strategy I'm developing. You know what? Posting back test results online with a sample size less than 1,000 trades should be a delete your account level embarrassing event. We've got to get more people to understand the amount of data that you need for a really significant result. I'm so tired of seeing all these retail traders come in and post stuff. Like, it just cringes so hard because I remember when I did that sort of thing. And like, I just know how much time and effort they're wasting, and it's embarrassing for them. They don't see it. They don't, like, everybody else is so naive that they but when you really realize how common and big of a mistake it is, it really should be embarrassing to you. Oh, that's interesting. They just kind of got skipped down 3 ticks again. Markets seem unhappy. Well, something's definitely going on in ES, isn't it? Like all of a sudden ES is down. How much is that? Oh, it's only 3 points, but it's just like all of a sudden. It hasn't opened up yet. What happened here in bonds, though, I don't think is very good for the larger. Let's come back and look at a volume profile and see how it looks on the volume profile now. And see, that just doesn't look very good. It's interesting because that drop looks like way more significant than most of these other ones that we've had recently. Not as big as the really major data points from last week, though, like the non-farms and the CPI. We're still higher than we were CPI. But for some reason, hard rejection at that 111 level this time. We're gonna break a new low. They're awfully close. There's an iceberg there at the bottom. Iceberg on both sides, actually. Uptick.
So Adnox Jaber says the UAE is looking to grow US energy investment a sixfold in the next 10 years to $440 billion. One minute now until we get the market on open imbalance. Ten seconds. So we're looking now to the market on open imbalance. S&P 500 sell side 291 million, Nasdaq 100 sell side 29 million, Dow 30 sell side 57 million, Mag 7 sell side 15 million. So there are reports that Musk's XAI is in talks to raise $4.3 billion in equity funding. So the EU plans a new fast-track permitting for defence investments, and the EU are to favour weapons deals in the defence industry push.
We came off of the lows, but I would say that flows have been relatively quiet. Like if we had been pushed off the edge, I would have been thinking it probably has more to do with, you know, like correlations. I would note that the Japanese yen fell before the larger treasuries did. So maybe we could have used the Japanese yen dropping as kind of the canary in the coal mine that might have told us that the flows in yen were going to come in short. But yeah, I'd say pretty quiet. And it doesn't surprise me to see things quiet down shortly after the retail sales because there is a Federal Reserve Day tomorrow. And we haven't gotten anything on the Iran front. It's going to be interesting tomorrow. I don't think I've ever seen a situation where we had a Federal Reserve meeting and then the next day was a holiday. I really dislike Juneteenth as a holiday. Not because of like the reasoning behind it or how it came to be or anything like that. But rather, it ends up being a holiday, like a federal holiday in the middle of the week. And it's been like, this will be what, the third year? And all 3 years, I feel like it's been disruptive. Yeah, the time sucks. And I mean, there's not really any holidays in June. So, like, it's okay to have a holiday in the middle of June, but it's just like, have it on a Friday, man. I don't know. Man, they just got smacked down again. So it's very interesting here in the treasuries. We keep seeing like, you know, like they backed off of this low maybe twice now, but then we will see like 3 ticks down all at once. Especially that Fridays are usually bad price action. Well, I have a theory that Fridays are not bad price action, but rather we just do not understand the systemic flows that come through on Fridays. I think that there are rebalancing flows and people getting out of positions for the weekend and things like that happen on Fridays that we either don't understand or are too complex with not enough information visible for us to be able to understand them. You know, like maybe if we had all of the order flows, we could see that, you know, if this fund is in a position and it's up this much, they're going to close it out for the weekend or something like that. So I think that's what's going on there. Because I've definitely seen in my own data where like Mondays and Fridays are my worst days. Fridays because either, even if you take out non-farms, I do poorly on Friday. And I think it's because, you know, like I'll see the data or whatever. I think, okay, we should be going this way. But then some sort of passive flow from some systematic strategy comes through and ruins it. Monday, it's probably because I'll just end up taking a bunch of trades on a day where there's nothing happening. So... But that was going way, way back. What day is the holiday? Thursday. So we get the Federal Reserve Day tomorrow, and then Thursday is the Juneteenth holiday. And I don't know about this one. If I get that day off or not. Wow, from r/trading. I lost over 30K in trading. I'm 21. How did you get $30,000 to lose? My man. How did you get good at reading the DOM? Well, I don't know how good I actually am at it. That's kind of something that's difficult to quantify, right? But I think that I'm pretty good at it. And I think that it came from two things. One was just watching a lot, and watching a lot of the treasuries, because in the treasuries, the behaviors are much more clear than other instruments. And having a strong empirically based understanding of the data. Knowing the kinds of statistical anomalies that we actually see in order flow data and the consequences of those. And then you're coming over here and you're looking, because otherwise it's just a bunch of data. And you might, and not only is it just a bunch of data, but it's a bunch of data that I think requires certain like context for you to really understand anyways. And when that context is not there, your brain just kind of makes it up. Wow, 4K to take it down through 20. So if you don't have that empirically based grounding, then you end up looking at the wrong things. That's why I have that order flow video series. You watch that. You're going to know the most important things to look for, the sorts of things that tend to happen, and the fact that the order flow needs to be read within the context of why are people actually trading that day? You know, what was the news? What's driving those order flows? Then you put in a lot of screen time and you can get pretty effective at it. Is this a good example of inelasticity? Let's say UB is at 115.16. DOM shows low liquidity above. Someone starts sweeping the ask with a lot of 50 lot buy orders. Resting orders pull at 115.17 and price jumps straight to 115.19. Barely any volume traded. So the fact that you could trade through an area with relatively little volume is not necessarily what I would say is like the market being inelastic, but rather that it is always the case that the market will move further than you expect it to. And that once that's done, so I think the thing that I would say like really displays the market inelasticity is that when you get a move like that, it doesn't immediately snap back. Typically speaking, you'll get a move like that, and then it will find balance somewhere in that new area. And just the impact is permanent, right? Because in a market that is informationally efficient, we would expect that if somebody was coming into the market and just buying a ton of it to move it up, that the market would say, well, but there's no new information, so we should trade back down. And that's not what happens. The market has a long memory. The impacts are permanent. That's when it leaves. Well, so where it balances at tends to be where the liquidity hole forms. Yeah. So like what we've had here is probably a pretty okay example. There is a bump in the volume profile at 21.5, right? It didn't move the point of control, and we are moving a little bit lower, but we spent a lot of time there, and it's honestly, it's just kind of random which price it picks. So that was kind of the place where a bunch of volume traded at first, and so then they started rotating around that. Caused the liquidity hole. And now you would say, well, the volume so far, we haven't gotten more sells. We might be getting another sell here. When we pushed below, what was it? Oh, actually, 21.5 is maybe not, but actually is not a good example. Because that volume was put in there when they broke. We didn't spend a lot of time at 21.5. But, you know, we don't know why this moved. But let's just say, for the sake of argument, we know that this doesn't have anything to do with the fundamentals. Then traditional view of a market should be, this should go right back up, right? That would be an elastic market. That would be like, you know, it's a rubber band. It can't get too far away. It gets pulled back in. Inelastic, you pull your fingers apart, the rubber band just gets loose. That's the way that I think of inelastic. That's the, what do we call this? Is it an allegory? I don't know. The word I'm searching for here is, but it's a rubber band. In an elastic market, it's like you have a rubber band between your hands. You pull your hands apart, the rubber band will tend to pull your hands back together. That's an elastic market. An inelastic market would be, you pull your hands apart, it makes the rubber band more loose. And then it takes time for, you know, you bring the other hand up, and then over time, the rubber band heals. And then it's right here. Would you say I guess you could say the rubber band breaks might be another way of thinking about it. But then you can't continue using the rubber band, right? Man, 19 now. I tell you what, man, this flow has been pretty wild and definitely not expected from me. I think that I read the order flow pretty well in that, like, I wasn't looking to take a short because I'm only going to be looking to take a short when I think that I know a flow is coming through. Since I don't know what has caused this flow, I'm not going to have a trade. But I was definitely kind of getting all of the signs from the order flow and everything that told me that taking a long was a bad idea. So it kept me out of a bad trade, at least. I wish I knew why they were selling it so hard. Because, well, I don't know. Again, when we come back over to this chart, 19 doesn't seem that significant. In fact, you could even get below 16 and they would probably be okay. But it sure does seem like an unusual move. I guess, you know, on one of the other issues is that there's so many things going on. Like, I think that there's probably a number of things that we could probably pin this flow on. There's so many things going on, and then there's so many things that we might not know about yet. Like, the market could be moving because there is information about the situation with Iran that hasn't become public yet. But like congressmen, and they go and they tell the firms, and the firm, you know, That absolutely happens. Would you say the best way to track the flow of money is to pay attention to the news and how the orders are flowing into the market? Yeah. And you want to be doing it on multiple instruments. So that doesn't mean that you have to be looking at the DOM on multiple instruments, but you do want to see, okay, money's coming into treasuries, money's coming out of this market over here, right? Or if we're just seeing a lot of money going into oil, where is it coming from? There often would be selling in other assets. And that can help you sort out what the cause of the flow is. So that in the future, next time that you see that thing happen, you'll go, oh, well, we might see this flow. And then you can take a trade on it.
Release of the US NAHB Housing Markets Index, forecast 36 on the prior 34. And
I normally have Z and ZB and UB pulled up on Jigsaw, and then I look at CL, Gold, and ES. That's a good start. It's a good start. So what I would recommend is have a market analyzer. Have a market analyzer with like all of the major futures, including things like gold, silver, wheat, soybeans, corn. Do I have HG on here? Yeah, I do. Copper. All of the major commodities, their net change on the day and their volume. I wish I had something that was better at telling me like relative volume to say that this is trading more actively today, but I don't really have a good one. And I could make one, but it would be like, to put that on every one of these would be like way too much processing power, I think. Not worth it. While we were looking at that, it looks like they made another tick or two. Is it really that big of a move? Well, starting from 26, I feel like it is. 26 to 18. So that's 8 times 2, 16 ticks. $250. And normally it's hard for me to get more than 10 ticks. Oh, you know what? I never turned my robot on. Oh, I'm so mad. Would it have taken a trade during any of that? Let's see. It will at least tell me post hoc, you know, if it would have taken trades. Got some business inventories today. Oh, okay. So it actually says that would have triggered it long and it would have taken the stop on that one. And then, we never did actually get a full short.
The Trump administration said to consider a crackdown on.
There might have been a
adverts.
spot in here where it crossed over interbar and it's not seeing that.
So that's RFK Jr.'s drug ad crackdown plan threatens the $10 billion market.
When Newsquack just told me a headline that like they want to crack down on pharmaceutical advertising on TV, and the market is kind of unhappy about that. I don't know why that's a headline coming over my Newsquack, because we've known about that for days.
So looking into this piece then, it does note that although the US is the only place beside New Zealand where pharma companies can directly advertise, banning pharma ads outright could make the administration vulnerable to lawsuits, so it is instead focusing on cutting down on the practice by adding legal and financial hurdles, according to people familiar with the plans who weren't authorized to speak publicly on the matter. As again, the Trump administration is said to consider a crackdown on pharma adverts.
Okay, so there is something significant in this story here.
The US NAHB.
The Trump administration isn't going to outright ban them. They're just going to add more regulations around required disclosures and stuff.
For the month of April, month-over-month forecast is 0% on the prior 0.1%.
If you had to put it in percentages, how accurate do you think ChatGPT 4 is? Depends on your definition of accurate. If it is that in any one response, that everything it says in the response is correct, I would say 0. If it was for every piece of information that it cites, whether that is correct or not, it's maybe 90%. So this is something that I think humans aren't very good at understanding. It was like we were talking about yesterday with the protester thing, when we say the protests are mostly peaceful. So if you were to look at individuals at the protest, you know, which percentage of them are peaceful, and you would probably see that 99.9, if not 0.99% of them are peaceful. But that's a situation where that 0.01% of the people being not peaceful has a really strong impact on everything else and ends up with a protest that is not peaceful. And so it is the same thing here with ChatGPT, that while it's going to get most things right, it's wrong enough that it makes it almost useless in some situations.
So just to keep users aware, there were reports floating around that two
Pull up your Jigsaw session.
tankers
Why?
have collided in the Strait of Hormuz, the world's largest critical oil checkpoint just off the coast of Iran. Maritime security monitors note that this collision is not security related. It does appear that signals are being jammed on navigational devices thanks to the regional conflict in the Middle East.
Literally never look at this. Time zone. That's interesting that it defaults to the time zone that Jigsaw uses. Let's see here. I want +7 or -7. There we go. Mountain time. Oh, session name. CBOT? No. There you go. Central time. Starts at 7:20. Central time. That's correct.
1 minute now to US
Ends
data.
at 4.
I'll lead with the US NAHB Housing Market Index.
Basically, my DOMs reset at the start of their session. I have regular session volume profiles, not extended session volume profiles.
Ten seconds. $32, lower than forecast 36. Business inventories 0%, 0% as expected.
So there is business inventories. It came in line with the expectation is 0. I didn't even realize what time it was. It's time for me to get going, isn't it? Okay, well, I guess we'll see what happens at Federal Reserve meeting tomorrow. So, time for me to get going. I will see you then. In the meantime,